welcome to Paydirt TV. I'm Dominic Piper. Today I'm joined by Michael Naylor, Managing Director of EV Metals. Michael, thanks for coming in.
Thank you, Dominic. Great to be working with Paydirt.
Michael, a lot of viewers won't know EV Metals. It's not listed here in ASX. Where did this company spring from?
We formed the company in 2014. At that stage we were focused on building an MHP plant based on our Rangewell nickel cobalt resources in the Midwest region of Western Australia, and a part of that plant was a nickel chemicals plant. And at that point in time we started to look at developing the project, and as you well know, we were interviewed first on that project back in 2017.
Yeah, that's right. Yeah, so you were almost a classical junior explorer looking to develop a nickel laterite project here in Western Australia. But the company's undergone a sort of dramatic shift in recent times. You're now backed by Saudi Arabian authorities and investment funds. Can you explain a little bit about that deal?
Yes, so with that project, and about not long after we first met and spoke, we had an approach from parties in the kingdom to build the nickel chemicals plant, and they would decouple the chemicals plant from the MHP plant and build it in the kingdom. That led us to into 2019, where we began our journey into the kingdom, and the first step in that process was understanding Vision 2030, which in simple terms to us then represented a national strategic plan for the transformation of the Kingdom of Saudi Arabia's economy from being a global leader in energy based on fossil fuels to being a global leader in energy based on renewables. And of course, in the centre of that fits a transition from, if you like, oil and gas based minerals or energy to the strategic minerals required for decarbonisation. And with that, we started to look at Vision 2030 very closely, and the breakthrough came for us in the aspirations of Vision 2030 to build midstream and downstream processing facilities for production of cathode active materials. And that's what I'd like to talk to you about today. It's a centrepiece and the most important part of our business strategy and model.
It sounds like a very ambitious strategy to build a downstream and midstream processing industry in Saudi Arabia using EV metals. What is it about the combination of West Australian hard rock assets and Saudi downstream processing capabilities that makes this a perfect fit?
It's a good description. It is a perfect fit. Firstly, the barrier to entry to our business, and Australia in particular, is access to capital. What we're seeing in the kingdom is a transition, a deployment of petro-capital from fossil fuel-based business to renewables. And through that, we in our agreement with the National Industrial Development Centre have committed to developing the Saudi supply chain for critical raw materials for the battery chemicals complex. But that supply chain involves exploration in the minerals and metals sector, which is underdeveloped, underexplored, and hasn't had the attention that oil and gas have had historically in the kingdom. With that, being realistic to discover, develop and produce a new mineral deposit, be it lithium, nickel, cobalt and the like, and there's great potential there for those minerals and metals in the Arabian Shield. You're looking at 10 years. And where the kingdom has been strategic through its investment in EVM is to look at upstream integration and development of supply chains in a politically stable country with low sovereign risk and transparent supply. And Western Australia's a standout for that. And what we're seeing now is this company, EV Metals Group, with the kingdom, has taken a strategic step to invest in Western Australia and the supply chains here. And why not? It's one of the best countries in the world, miner friendly, to develop upstream integration of supply chains, and with that will come investment into Western Australia.
And of course, as you say, it's a real centre of lithium exploration and development at the moment. EV Metals itself has signed an agreement with a junior explorer here, Zenith Minerals, who we've had on Paydirt TV recently. Tell us about what attracted you to Zenith and its portfolio of lithium assets.
Well, that was launched, our agreement with Zenith Lithium followed shortly after an announcement that we would form the Australian Lithium Alliance, which is a strategic initiative of EV Metals Group to fund and fast-track exploration for development and mining of lithium minerals in Western Australia. Why? We are looking for 330,000 tonnes of spodumene concentrate containing 6% lithium oxide as the first feedstock to the first 2 trains of lithium hydroxide monohydrate in the battery chemicals complex in the Kingdom. When we started this exercise, we looked for 15 tonnes, only 15 tonnes of SC6 for test work, and we couldn't buy it from Western Australia because our entire supply is wrapped up in offtake agreements with Chinese processing companies and one North American company. But the supplier of the lithium from that Greenbushes project basically said to us, if you want to buy offtake, you have to speak to our shareholders, ring Beijing, ring North Carolina. And that gave us a good insight to just where spodumene production was headed. And we've got some great companies here. I mean, Pilbara Minerals is leading the way. Liontown is a project that's coming to fruition, and they've done some really interesting things with their offtake agreements. But for us, looking to the future, the Australian Lithium Alliance therefore went into the joint venture agreement with Zenith. Why Zenith? A perfect strategic fit. Stan MacDonald and Mick Clifford have developed a company that has a reputation for project generation, early evaluation, and bring an expertise in exploration that is first class for us. We've got all the technical capabilities on the process side for spodumene production, understanding that needs to be designed for the lithium hydroxide monohydrate plant. Zenith is debt-free. People in the company are people we can work with. They understand the business model and strategy of EVM, and uniquely, therefore, we've an agreement that will fund them right through to production, fully funded CapEx, with 40% in the project, and from production, they'll repay their 40% of capital out of cash flow. With that, they have strategic assets. We really like Split Rocks. Its proximity to Eskew and Wesfarmers Mount Holland project is showing us we're in a very good province. I mean, that project in itself, or that deposit, is world class. As well, we like Waratah Well, which is up in our backyard in the Midwest region. Again, the selection of the assets with Zenith give us great confidence in those assets. In addition to that, clearly there are transactions that have flowed from that. We can't say much about those now as Zenith is listed, but there's a good news flow for Zenith coming from that. Our plans are to build and work with Zenith to build it into the largest lithium spodumene producer through the Zenith Lithium joint venture, and that means the largest producer of spodumene in Western Australia, therefore the world.
So we can expect to see the Australian Lithium Alliance and through the JV with Zenith a couple of more deals to come. What about the other commodities in nickel and in cobalt?
Yes, well, that's a good question. We are building a battery chemicals complex. It consists of 3 plants. Lithium hydroxide monohydrate is in the lithium chemicals plant. The nickel chemicals plant is designed to take mixed hydroxide precipitate to produce nickel, cobalt, manganese sulfate. Those 2 process streams combine to produce cathode active materials, which is the key to the future. It's one thing to produce lithium and nickel, but cathode active materials are the key chemicals required for the cathode chemistries, and there are 2 that are dominant and now emerging. There's high energy density cathode active materials, which will be cathodes that contain lithium, nickel, cobalt and manganese with high nickel loadings for high performance. The lower energy density cathode active materials is lithium, iron or ferrous phosphate, and that's emerging as a very, very steep growth market because the OEMs, the original equipment manufacturers, are seeing shortages in the supply chain for nickel going forward. And our market intelligence analysis and forecasts are showing exactly that. So the back half of this year, this decade rather, we're seeing large structural deficits emerge both for lithium and in particular nickel. And going out to 2040, our forecast is showing that demand for nickel for electric vehicles alone is 4 million tonnes of nickel per annum. We can't see the projects in the pipeline to supply that growth. And now that takes us into understanding globally where the big investment has occurred in electric vehicle manufacturing plants, battery cell manufacturing plants. The demand for those critical raw materials in the form of cathode active materials is way above what the market can supply. So we see huge supply chain risk for those OEMs, and it's something they're now just starting to understand. And now our narrative and our discussions are directly with electric vehicle manufacturers and to a lesser extent battery cell manufacturers. You can't build a long-term electric vehicle business with a long-term supply chain. And there are new battery cell manufacturers and electric vehicle manufacturers that simply don't have that. So with the Kingdom, with that battery chemicals complex being the world's first integrated battery chemicals complex, puts us in a position to build a very large cathode active materials output, probably the largest outside of China. And with that, we then go to the OEMs, the electric vehicle manufacturers and the battery cell manufacturers and say, look, if you want to manage your price exposure and supply chain risk, we have the vertically integrated business model from in situ metals through to cathode active materials to assist you to develop a long-term electric vehicle and battery cell manufacturing business. That's where the world is heading. And you're seeing some very interesting developments there. For example, Tesla and its offtake agreement with nickel with BHP. I think that Toyota's been there as well. We like the way Liontown's positioned itself with Tesla's offtake agreements. That's a sure sign that OEMs are going upstream to understand how, and more importantly, manage their cost structure and their supply chain risk.
There's certainly a scramble amongst major car manufacturers and in fact governments to secure an independent supply chain for those battery materials exactly as you're talking about.
You're spot on there, because you'll see us talk about geopolitical alignment of supply chains. And this is really, really strategic and important for the future. It is about major Western economies coming to terms with the fact that they can't have or rely on a single source and a single point of failure in supply chains. China dominates this business, where there are 80% of global processing capacity. That's why they're so powerful. The interesting thing, and things that has been overlooked in our Australian Lithium Alliance, is EV Metals Group is the only company in this country now that can offer an offtake agreement as an alternative to Chinese processing companies, and again bring about that geopolitical alignment. And we see Saudi as a strategic pivot between Japan, Australia, India, North America, USA and the United Kingdom, and again strategically placed in terms of location but also geopolitically, and I think that's the future, and that's a part of the future development of the business globally.
It's certainly a powerful partner to have for a development project. Michael, thanks for joining us today on Paydirt TV, and we look forward to seeing your presentation at the conference.
Dominic, thank you so much.
Thank you.
I look forward to being with you.